Hello and welcome to DigFin VOX, Voices in Digital Finance. I'm your host, Jame DiBiasio. If you enjoy the program, give us a like and let the YouTube algorithm do its work. My guest today is Rama Sridhar, Executive Vice President at Mastercard in Singapore. She's responsible for a wide range of activities from new payment flows, fintech partnerships, and digital economy. The big question is, can the global processing giants like Mastercard continue to enjoy the same success in this brave new world of new customer segments and new technologies? Rama Sridhar from Mastercard, welcome to DigFin VOX.
My pleasure. Thank you for having me again.
Oh, I'm delighted to have you. And you have been doing a lot of really interesting work there. You're involved with digital economy, new partnerships, new payment flows, all the cool stuff going on in payments in Asia today. So how did, just really quickly, just introduce your background. How did you end up in this fascinating role?
By design and by accident, a mix of both, actually. So I've done a few resets in my career. I started with technology and moved to banking. And then I strayed into payments and stuck with it. And now, a decade or so later, I realized payments is also about technology. So in some sense, my career has almost come full circle from where I started, right? Back to technology.
Yes.
And that is my first love. So marrying technology to solve problems of commerce is really where it all comes together, and payments is at that pointy edge of it, and that stayed as my passion. And then, in the last few years, we've seen so much of technology-led transformation of businesses that it looked like the next big opportunity. And when this chance to lead digital and partnerships with digital platforms came along, that just felt like something that I would just jump at because it was so core to my own personal passion.
That's amazing, and it's kind of funny in a way that you start off as a tech person, and then in payments nobody really thought about that at all. It was probably a very quiet part of the business, and then in the past 5 to 10 years, it's just taken over everything, right?
Correct. And I think going forward, if you think about it, it's technology which is driving business decisioning, growth decisioning, and all of those things, because the technology stacks of relevance of 20 years back, 30, 40 years back, is perhaps also under siege and challenge as well. So it's a very interesting point in payments, in technology, and the confluence of both as well.
Let's talk about that. Mastercard, along with Visa, of course, and a few others, have roots going back to the 1960s. So you've got legacy, and you guys have dominated the credit card and many other aspects of payments processing around the world. But yet, as you noted, there is a legacy technology issue. I know you guys do a lot of partnerships, and we'll talk about that. But let's talk about the legacy business, particularly when you're dealing with Asian or emerging markets. How suitable is that today, and what have you been able to do to make sure that what you're working on is keeping up with this fast-paced environment?
So certainly being maybe a 55, 60-year-old company is also an advantage, although the moment we talk about legacy technology stacks, it's always construed as a handicap. I first want to frame the opportunity side of it, right?
Okay.
It's a technology stack that's been around, being tested for trillions of dollars of transactions, tested through the times, has morphed with the evolution of protocols of transmission, messaging, that have evolved not just in one market, but throughout the globe. And therefore, there is a certain level of robustness, resilience, market dexterity, security of the transaction, of the account, of the customer that's built in. I think all of that together is totally priceless. Coupled with the fact that you're actually settling across 168 currencies in more than 200 markets of the world, I think there is something to be said for the size, scale, experience of the core technology stack that these companies have, right?
Yeah.
Now, if you think about it, what does that make the network? It makes it one of the original fintechs of the world, because that's really what fintechs are trying to do. Now, the real question, and a very pertinent one, is what are you doing to adapt to changing times? So then that begs the question on what is changing. What is changing is who is driving transactions from a consumer perspective, or from a small merchant perspective, or a business perspective, is changing. It is evolving. It is no longer the domain only of the big banks, right? And that's a trend that we obviously adapted to by opening up collaborations, partnerships, and seamlessly incorporating all of these new client segments, whether they are social media platforms, the big tech platforms, marketplaces, device manufacturers, telcos. Everyone is now a customer, which was perhaps not the case earlier, right? So that's one big thing, and governments as well. The second thing really is when you think about what has changed and how we adapt, form factors have changed. Now, plastic, which was the only way of doing business, has also evolved to doing transactions on the mobile phone, tap on phone transactions in place of swipe and dip. QR codes, and particularly through COVID, we've seen an explosion in QR codes. Payment rails have evolved, and we have adapted to that as well. Cards used to be the only rails. Account payment rails have taken off like nothing else, yes, particularly in Asia. We've adapted to that as well. So if you, maybe that kind of gives you a flavor of how the company has adapted as the evolution happens and will continue to happen.
There's a question around who is using these digital wallets. You mentioned the accounts, same thing, versus who would be a traditional, whether it's a consumer or a merchant that would use a credit card, for example, which is, you know, the bread and butter for a group like Mastercard. So in Asia, just citing some research that you guys had put out recently, I saw that you're now by 2025 estimating that this region will have 2.6 billion users of a digital account, digital wallet of some kind, moving up to $7 trillion worth of goods and services. That's a very large number. My question is, are these the same people that would be a credit card user or receiving a credit card from, say, a bank? Because we're not talking about, you know, is this apples and apples or apples and pears?
Clearly not, right? So I think the 2.6 billion users, yes, there will be some who are also credit card users, but I think mostly it is an expansion of the market. It is the digital inclusion that is playing out. It's the financial inclusion that's playing out. So, you know, those that did not have bank accounts, or those that had bank accounts that were not digital enough, are now perhaps going to use the wallets as a quasi-bank account. And that is the population that we are referring to. So from our perspective, they are additive to the credit base that you're probably already working with, and which will logically grow at its own organic rate.
Yes.
The second big additive, I think, to the demographic is the fact that when we introduce products like installment purchases, that also expands the credit segment to include perhaps the younger demographic, the new to credit demographic, which has been on debit mostly. And that again adds to the population that was perhaps only operating with the credit instrument. So I think the short answer really is there will be significant new populations which will come in and use these rails through various instruments, wallets being one of them. And that, I think, from our perspective, is definitely new market share that we would like to tap into.
How do you do that from a P&L perspective? So you have partnerships, you can work with fintechs, you can work with digital banks, you can work with all kinds of, telcos, you reference other, consumer facing groups to try to reach some of these new market segments, people that may not have a traditional bank account. But do you, in terms of the way that you get paid helping process these transactions, or the incentives for banks when they're issuing a credit card to a consumer from a fee point of view, versus if a consumer is operating on a wallet from a consumer facing app, does it add up? Does it make sense for you to be able to go into these new markets in a sustainable, profitable way?
I think there is no singular answer for that one, really, Jim, because there is economics that plays at the high ticket transactions and the larger merchants. But when you're looking at small ticket transactions, smaller micro merchants, we will obviously be very aligned with how the economics of the domestic market also evolves, right? Because in order to be relevant and in order to be having a credible play with the merchants, with the consumers, you've got to play at the level at which they find it attractive to do business with you. Yes. I think without going too much into the detail of it, that is probably logical as a starting point, and that would also be a guiding factor for how we approach doing business with newer client segments, newer transaction vectors. There is no singular answer because the markets perform at different price points, and that will also dictate our own approach to a market. I don't think globally there is one way of doing business. We have to be quite local in the way we adapt our own market penetration strategies.
And in Asia, that's always a challenge because every local market, even though they might be quite substantial, is very different from one place to the next.
This is true.
Yes. How do you juggle those tensions? I mean, all international businesses have this tension. How do you have a philosophy in terms of what makes sense? How do you go into India versus in Indonesia versus the Philippines?
I think a bit of it is what I said right earlier. To understand where the resilience of the network is your asset, and to understand where contextualization for the market or the use case is a need, I think is extremely important. I'm not even saying there can be a developed and developing answer. At every market level, who constitutes the major ecosystem players? What is the current composition of the market? What is the level of penetration? What's the urban-rural mix? What kind of transactions? Where is the propensity for shift? I think all of those go into deciding what the market strategy can look like.
An aspect of this, we're talking about digital wallets, people that may not have a traditional bank account, people in a variety of markets. Financial inclusion is a big part of that. When does financial inclusion work in really nuts and bolts ways versus being a buzzword? It
works when you actually can do stuff with the money that is in your account, isn't it? When doing an electronic transaction on an account actually opens up possibilities for further growth. Okay, when these electronic transactions, when you're financially included, that then it should open up the possibility of you transacting in multiple environments electronically. Then there is wide use for it. It should also enable you to access credit if you've never been able to do so before. It should be able to provide you a transaction history where if you are a micro entrepreneur or a small entrepreneur, you're actually able to secure meaningful capital to scale your business. That is when financial inclusion actually creates a broad-based impact on the wider economy and creates what I call the digital dividends at a macroeconomic level. Otherwise, it is a buzzword, like you said, right? I mean, having a bank account is not equal to financial inclusion in my mind.
Yes. Okay. So the bank account itself is not inclusion. It's only the most basic starting point. But are you quite optimistic what you're seeing? Do you think financial inclusion is making meaningful headway in the region?
I think yes is the short answer. What I'm encouraged by is it is front and center for the regulators. Every regulator in this region has a plan and a mission to create cashless environment. Now, whether it becomes truly cashless from a 70% cash region, that's debatable. But to me, the direction of travel is firm. There is ownership at the central bank level, which is great. There is significant investment at the private sector level to create the applications and the use cases. And there is digital public good infrastructure stacks that have emerged, for example, in India, which has completely lifted huge swaths of the population to start doing digital transactions. And then you have the technology players who recognize both the opportunity and the size of the market and are coming in to solve for consumer experience through the digital platforms, which again is what is required to create the tailwind for the whole movement. So there's a ton of things happening, not one entity structure is doing it, but when you piece it together, I feel like there is a significant momentum in the ecosystem. Having said that, the only thing I will say is, while a lot is happening within nations or within concentrated parts of nations, democratizing this across ecosystems and not just for e-commerce purchases, for example, is important. Two, when we have a connected community, understanding how we can bring this together across ecosystems and guarding against closed loop plays or islands of information is also a risk that we need to manage. The third one is, as this momentum builds up, we have to understand the more digital you are, the more exposed to cyber insecurities, right? And therefore investing in security infrastructure and making sure transactions are secure is also an important thing to do, right?
Yes.
And there's a last one that I'm very fond of, when transactions go digital, they first are domestic and then seamlessly go global. And in that transference continuum, I think what does legislation implications look like and what are the variances to be solved is, I think, a body of work that needs to evolve yet.
Thank you. I want to switch gears for a moment. You're a technologist by background and by passion. What are some of the technologies that you have been grappling with that are interesting to you or that you've had to be cautious about? What does that lay of the land look like from the tech/fintech perspective?
So one area in which I feel like I'm still quite the starter is this whole crypto world. Because not because I'm not a believer, I actually am completely open-minded about where this could take us. And in fact, I think there is a significant opportunity that it opens up. But it is a space which, again, because I like the the regulatory framework and the compliance part of it is very important from a consideration perspective. I feel that it still needs to play out, and it's not done. So I'm kind of grappling with that. The other one really is everyone talks about metaverse. I will be honest and say that's a space again where I feel um, there's a lot of ambition, aspiration, and possibility. Um, I would still kind of keep options open because at one level there is a significant market expansion opportunity there. But at another level, what is the cost of doing business in the metaverse? What do you really need? Is it all these bulky equipments at high cost? Does that mean it's not inclusive enough? All of those are valid questions, right? And those are not yet resolved in my mind.
Yeah. Sometimes these technologies can look good and then they may or may not work out. I mean, right now we're going through a serious consolidation phase around buy now, pay later apps.
Right.
They've had, whether you like them or dislike them for their business model or what they are meant to provide to either consumers or merchants, the space at the most basic level doesn't seem to make money. So how have you approached these things? How do you, obviously you need to engage with whether it's buy now, pay later or other types of fintech models. What's the way you kind of engage with them, hedge them, risk manage new things?
So it's not just buy now, pay later, right? So it is this whole difference between working with players who are nascent in the industry, if I may say so, irrespective of what the underlying business model is, and while working with them, we need to support them, but also defend the franchise against undesirable events, right? Particularly failures. So we do that historically with the franchise reviews. We work very carefully with the players. We tend to pick with great thought. We also work with a lot of enablers, processors who actually work with the smaller players so that there is a space and runway for their own growth while they figure out how to scale themselves up, or some of them even fail. So there is a risk hedge, as you call it, in the business model, in the distribution channel construct that we are already approaching with. I think that's probably the best way to summarize it.
You mentioned crypto as something that's interesting, but still needs to have that compliance feature worked out by regulators. What else has been working? What's exciting right now?
So real-time payments is working. It's working really well. I think our engagement with digital banks, we work with most of the big players. Our expansion, I think with travel coming back, we will see a lot of travel-related spends that's working really well. Our engagement across digital platforms, I think merchants are increasingly wanting to do tokenized transactions, which is very helpful because you're increasing the security in the entire ecosystem. So digitization of what is visible and what is not visible, that is really working well. There is a seamless co-opting into interoperable network rails, which used to be a bit of an opportunity a few years back when I started. That I think is working very well. Two wallets is just one example. The fintech players, the crypto players for on-ramping and off-ramping, all of that is, I think, working really, really well. The space that we would watch is obviously the Web 3.0 metaverse, slightly out there, longer horizon. But I think within what we are currently equipped to do and what the ecosystem is equipped to do, I think we're in a reasonably good space on the digitization front, both on the account payment side and also on the card payment side.
Yes. Last sort of techie question is interoperability, and I guess standards is part of that question. Where is the biggest gap right now that you're hoping or working on to close?
I think there are two sets of gaps today and a third one that's emerging. The first set of gap really is within the country itself, within every country. There are islanded plays that are emerging, and they have been there, right? So the wallet ecosystems was a completely closed loop play. Interacting across wallets was an opportunity which I think we have gone after significantly. The second area where I think interoperability is an opportunity is really in cross-border payments, particularly trade flows, particularly across fintechs and banks. At this point in time, this is an opportunity that the central banks are going after as well, because there is a need to facilitate seamless remittance transactions, not just for the white collar workers, but for the blue collar workers as well. So interoperability across domains in cross-border payments, I think is an opportunity. The third one where I am watching it carefully is even in this whole blockchain-led world, what is happening is there are so many permission blockchains within a blockchain ecosystem. But what it really means is there are multiple blockchain islands that are developing. How plays within each island and then across islands will interoperate is not understood yet, and it has not been figured out. So that I think will be a third big problem that will emerge and will need to be solved. Effectively, every time a new way of doing business, a new client segment, a new technology comes into play, first it starts off growing for its own niche thing, then it kind of grows into a fairly big size, then they want to protect. So many islands form, and then the islands start collapsing when you realize that playing together is better than playing silo. So I think we will see the same movie play out a few more times.
Okay. Rama, we've talked about financial inclusion in the industry. What about Mastercard and the industry itself? Do you feel that the workforce is representative of the populations that you're serving?
Well, diversity and inclusion is front and center of Mastercard's people agenda, and there's a lot of information in the public on that one. And so I can definitely vouch for the fact that we take the D&I agenda very seriously and make sure that our workforce is representative of the populations that we would like to engage with. So I think that's probably an absolute answer that I can give you in affirmative. In terms of my own engagement, I offer myself up for mentorship. I do that with a lot of employees within the company, but also interestingly, I do a lot of work with people in the industry outside the company, right? And startup founders I work with in the healthcare space. That's another personal passion because I want to do something for women's health. I do try and do enough work on the philanthropy side as well. So I think just in terms of being engaged in the wider society is something that each one of us has to do as a personal responsibility. I'm very conscious of that.
Well, it sounds like you have not just work talents, but a huge range of interests and passions, and that you're able to execute on many of them. That's very impressive and great to see. So thanks for sharing that, Rama. I've really enjoyed having you on DigFin VOX, and just want to say thank you for your time.
Thank you. I enjoyed the conversation. You've kept it freewheeling as ever. And I certainly hope I was able to address most of those questions.
I'm sure
you.
The audience will say yes to that. Thank you so much. Rama Sridhar from Mastercard.